Doug Webb is the Chief Financial Officer of the London Stock Exchange Group and joins us now. Thank you so much for joining us on the programme. Now, I just wanted to come back to something that was said today. Market conditions are expected to be testing. Is this because actually volatility, of course, increases your revenue on the longer term, except if there's too much volatility, then people get a little bit scared? Is that what is the main concern that you're going to have in the next year or so?
Well, Francine, good morning. I think it's very interesting that over the last couple of years we've been developing actually an increasingly diversified business where different elements of our business react in different ways to market conditions. So I think we're not saying anything new to people, I think, in commenting on the uncertainty that exists in the market at the moment. But the results we've delivered for the first half actually show that we have parts of our business that respond very well to that, and I think
absolutely. But going forward, is volatility getting to the point where actually people don't want to trade as much?
Well, as I say, I think you'll see different dynamics. Quite often you have greater trading in things like derivative products, for instance, whereas products like cash equities and some of our fixed income businesses benefit from more stable markets.
So what do you expect the trend to be in terms of volumes, but also in terms of trading for the next 6 months?
Well, we deliberately don't sort of give specific views as to what we think about the future. It'll obviously depend greatly on how the economic and wider political conditions develop.
In terms of what we're seeing from Europe, it must be a concern that we haven't yet resolved the European crisis at all. It may also get worse. Are you confident that the LSE can deliver somewhat a little bit better than some of the European exchanges just because companies here deliver on dividends and therefore maybe shareholders are expected to stay in these markets?
Well, I think the current conditions do mean it's very important for the position exchange to help companies succeed in these more difficult times, and I think the exchange, the London Stock Exchange, is very well positioned to do that. The strength of our the companies on our markets and the attractiveness of our markets as sources of equity raising for small, medium-sized and growing companies is very important at this time.
Now, you also announced an interim dividend of 9.3 pence. This is again to just make your shareholders stick with you?
Well, I think we've got very exciting times ahead, a lot of opportunities for us to grow the business, and the dividend is very much a sort of a balance between rewarding for the strong results we've put out in the first half of this year and ensuring that we can both invest in the business and deliver long-term performance for our shareholders going forward.
So if we look at the next 12 months, where is the main growth in your business going to come from?
Well, I think the interesting thing looking at the last 6 months is actually all 4 of our divisions grew well, and we think all 4 of them have real opportunities going forward. We've been really growing our post-trade and information services businesses in recent years, but also rolling out new products in areas such as pan-European derivatives, for instance.
Now, what will, for example, buying a majority in LCH actually do to you, or add to the LSE?
Well, I'm obviously not going to comment sort of specifically on that transaction. I think it's well known that we are in discussions. But being able to offer sort of more comprehensive services generally to our customers in all areas of their interaction with the capital markets is best, we believe, for the market and our specific customers.
But in order to bring your business forward, I guess you also need to add new products. Is there anything coming after possible acquisitions that you're quite excited about, that you can tell your shareholders about today?
Well, I say that nothing specific on the acquisition front. I mean, we did close last month the acquisition of the transaction reporting service from the FSA, which sort of grows our information services business. We continue to develop new organic products in areas such as derivatives and our fixed income business. I think you'll see a continuing steady drip of new product opportunities coming out from us in the coming months.
And in terms of acquisitions, would you be interested in the London Metal Exchange?
Well, again, I'm not going to comment on any sort of specifics. I mean, clearly we keep a close watch on the market and we'll see what develops in the future.
Doug Webb, what is your biggest concern for the next 12 months? I know we've talked a little bit about, you're pretty confident that actually all your divisions can grow, although the environment is still very uncertain. Is there one factor that makes you worry more than any other?
I think, like probably many business people, our main focus is ensuring that we execute on the opportunities that are in front of us. We can't directly influence the wider economic environment in which we sit, but we need to make sure that we're flexible enough to adapt to it and make sure we can gain benefit for our business in whichever way it develops.
Yeah, a lot of chief executives have actually told us that flexibility is very key. When do you expect the economic situation, though, to stabilise, I guess, in Europe, but also now we're looking at a possible recession worldwide?
Well, as I say, I think we're making sure that we plan on the basis of whether it stabilises in 6 months, a year, or longer. I don't think we can make that sort of specific call, as I don't think too many other people can.
All right, thank you so much for your time. That was Doug Webb, Chief Financial Officer of the LSE.